Today we're talking about Bitcoin versus stocks and which one we believe is a better investment. Which one potentially has greater upside? Which do we view riskier? We're getting into this, so stay tuned. Welcome to YCG, where we help your capital grow so you can achieve your financial goals. If that's something that interests you, then hit the subscribe button and the bell notification so you don't miss a thing. I'm Brian Yacktman, Chief Investment Officer at YCG, and I'm joined by Will Kruger, CEO, and Elliott Savage, Portfolio Manager. So guys, what's the bull case for Bitcoin and cryptocurrencies in general?
Well, I think cryptocurrency investors are excited right now because the asset class is based on a belief network, and that belief network is growing. And certainly there are people and investors who believe that the institutional world or Wall Street will get behind this asset class and make it more established than what it has been. And so I think that seems to be the primary bull case for owning a cryptocurrency or Bitcoin.
Yeah, and I would just add on to that and say, the uber bull case is essentially that crypto will become another alternative to gold as a safe haven asset, essentially an asset that can't be printed, similar to gold, whereas all the money around all the other currencies that governments control, everyone's worried about them continuing to print and print and print. And so the big bull case with crypto is that not only does it become this uncorrelated asset that can be a good addition to your portfolio, but also that on the way to getting there, that it can go up, who knows, 10 times from where it currently is.
Okay, so essentially you're saying if there's widespread adoption, then the demand becomes extremely high, but there's limited supply. And so potentially, the currency could go up multiple fold as it becomes widely part of this major belief network. So then what are the risks with Bitcoin?
Yeah, well, the risk is that doesn't happen. So we've essentially had this one alternative currency that's been this stable that's been the currency of choice as this alternative currency, which is gold, for thousands and thousands of years. And so there's just a lot of embedded belief in gold as that currency. And the question is cryptocurrency really, does it have enough additional potential advantages that it could either take the place of gold or just be another safe haven currency? But if it doesn't, then it could go to zero. There's no it's just ones and zeros in the internet. So there's no physical object or productive capacity that it has that limits its downside. So its downside really is zero.
Right. So I guess in one small vein, you could say there's a little advantage of gold in the sense that if it's not widely adopted, at least with gold, you still actually own an asset. With crypto, it's just an imaginary belief network, which is kind of like what a dollar bill is, right? I mean, that's all a dollar bill is, just a piece of paper. If people stop accepting it, it becomes worthless.
But the dollar bill is backed by the taxing authority of a government. And so it is a belief network. Essentially, that's what money is. But to the degree that it's a stable government, things like that, and a long history, that gives people a lot more confidence in something like that. And that's why there's a lot less volatility than there is in Bitcoin, in like the US dollar. Whereas if it's somewhere that's sort of undergoing a revolution, then you start to see the monetary currency of the government, going all over the place because people have no confidence that government will actually be able to tax its people. So
can you think of any other risks aside from what if it's not widely adopted? Let's say it is widely adopted. Are there any other risks?
Yeah, in our opinion, I think, again, there's going to be a focus on more regulation by the government. They're going to probably want to know and see more transparency with regards to the transactions. And right now, that's a benefit to the users of cryptocurrency or Bitcoin, that there isn't that regulation, that there isn't that transparency. And so even if it is widely adopted, they're still for it to be widely adopted, in our opinion, it's going to have to be more regulated. And then you wonder, the current users or asset holders of cryptocurrencies, do they move on to other greener pastures that are less regulated? We just don't know. There's a lot of uncertainty there.
Yeah, because there are definitely kind of two categories of, at least two categories of buyers of cryptocurrency. There are the institutions and hedge funds and others who are buying it on the hopes that it becomes this alternative currency. But then there's this other group of buyers which is engaged in a lot of illicit activities, because the good thing about cryptocurrency from their perspective is that it's very hard to track and it's very easy to exchange. So if you think about like a drug dealer or something showing up with a big bag of gold, gold just has a lot of disadvantages relative to, as an unregulated currency, relative to something like cryptocurrency, which again is just digital. And so it's easy to transfer all over the world if you're engaged in those sorts of activities. And one example of that is, in I think 2011 or something, there's someone actually from Austin who, which is where we are, who started this website on the dark web that was essentially the Amazon of illegal substances and products, and right. they settled those transactions in Bitcoin. And the real reason that they did that was because it was unregulated and easy to hide. And so the government wants to be able to tax its people and also wants to be able to stamp out illegal activity. And so they have a strong incentive to either make certain cryptocurrencies illegal or heavily regulate them if they get too big and impact the revenues and the laws of the countries too much.
So we've talked about then there's potentially huge upside if cryptocurrency, particularly Bitcoin, which seems to have the largest belief network at the moment, potentially huge upside, but also potentially some huge downside, big risks if not widely adopted, or regulation risk. So now let's contrast it with stocks. What can you guys tell me about what's the difference here when you're investing in, people talk about investing in Bitcoin or they talk about investing in stocks? Help us understand the difference.
Well, in my opinion, in our opinion, you just have to look at the track record, right? So the track record of stocks is just a lot longer. Cryptocurrency is a very, very new asset class. And, it appears that it's here to stay, but who knows? But stocks have been around for a very, very long time. In our opinion, you have businesses that generate cash. They produce real services and products. And that cash generating power is something that is very substantial and that you can invest in, and is in our opinion, less speculative because of that cash generating power.
Yeah, I mean, I agree. I view personally, I would say Bitcoin, I think of it as, it's not really investing in Bitcoin, it's speculating in Bitcoin, because we don't know what will happen, versus investing in businesses that are producing productive goods and services for the world.
And I would just highlight that, no one knows what's going to happen with stocks but with, just like no one knows what's going to happen with Bitcoin, but the bell curve of potential outcomes, we believe, is way, way wider in crypto than it is in stocks. And so if you think about a business like, if you own a portfolio of companies like Procter & Gamble, MasterCard and Visa, things like that, those are businesses that have a long history of providing a product or service to the world that the world feels is valuable. And they're actually, growing in many cases, they're growing in importance to the world. And they do provide that cash that you're getting, which is every year, which is in a sense, reducing the initial amount you put in. So you're getting paid to wait for them to get bigger. Whereas with something like Bitcoin, it has this huge upside potentially, but it's also got this huge downside, and nobody knows the probability of that upside versus that downside. And so we just feel like it's a less safe, in our view, that it's just a much harder thing with much higher risk of catastrophic downside that we just don't feel comfortable doing.
Those are great points, Elliott. I also think, it speaks to the benefit of being an active manager, because even in the asset class of stocks, like we've talked about in a prior video, we're seeing a lot of speculation in equities with businesses that don't generate cash, that aren't profitable. And so I think you need to be careful. And in our opinion, owning businesses with pricing power and long-term volume growth opportunities that have these network effects is the way to go.
Well, and Elliott, you brought up Procter & Gamble. I mean, just think of the difference there. Procter & Gamble, you're talking about 20 different business lines that generate over $1 billion in revenue a year. And that's coming from all over the globe, not in just one city or one region.
Right.
So you got diverse products from diverse regions, diverse currencies, all over the globe, generating this avalanche of cash. Now imagine getting a collection of this entire portfolio of these global champions. That to me is much more powerful than, if the market for cryptocurrency shut down, for example, there's no value there. But these businesses, they still have value whether the stock market is open or closed, because they're literally generating an avalanche of cash for all the products that they're delivering to the world. Well, thanks for tuning in for this episode of Common Sense. If you have other questions or comments, then please leave them in the comments section below. In the meantime, check out our other videos, and we'll see you in the next one.